The Sydney property market is so weird. In this video, we'll go through an update on the Sydney property market as of June 2023. We'll talk about why the Sydney property market might actually boom. You might expect me to say that, right? Property spruiker and all that, but I'll also talk about why I wouldn't personally buy in Sydney. And then we'll be using an amazing mapping tool going suburb by suburb into maybe the best pockets of Sydney to buy right now for the long term, the worst pockets of Sydney, and maybe those that are neither here or there on a physical actual map. So it's going to involve 3 to 4 charts and then the map. You got to wait for the map. It's going to be like really insightful because you won't have seen this anywhere else. Guys, if you're interested, carry on watching. My name's PK and I help people build passive income through the property investment accelerator using data without needing a $15,000 buyer's agent every single time in this channel. We talk about property, the economy, financial happiness. Without further ado, hit the subscribe button, hit the like button. Let's get into it. So this one here is really hard to ignore. I'm not here to say, guys, put down what you're doing, invest in Sydney, but check this out at least bear with me, right? Australia's net annual migrant intake. That's the top chart, and you can see the big peaks and the troughs, okay? And then at the bottom chart, you got Australia's housing market booms. Now, when you look at something like that, and I've kind of aligned up the years, so 1901 all the way to 2021. So you can kind of see like there was this big immigration boom around like the 1911 to 1915 mark, and just before that, and in fact around this 1921-22 mark, post the First World War, a lot of refugees, etc., there was this huge property boom. Okay, fast forward to the post-apocalyptic era, so to speak, post-World War II. You know, you've got, once again, a lot of soldiers from Australia coming back. You've got lots of refugees, all sorts of people moving to Australia in record numbers at that time, and you get a huge property boom. See how it sort of lines up right here? Okay, and then you've got in the 1970s, late 70s, another sort of migrant boom after the last one finally dissipated, and you get another property boom around this time. And then around like just before or around the GFC, you kind of 2006 to 2010 perhaps led to mining, a lot of people moving to Australia chasing big money. There was a big population or migrant boom again in Australia, and whilst that wasn't like the hugest like property boom in Australia, definitely you can see a surge in housing market prices. And then obviously everyone knows what's going on at the moment. So we've got this huge migration boom, I think already in the last 12 months, don't quote me off the top of my head, but there's like 500,000 migrants come from like New Zealand, the UK, India, other places to Australia. And clearly, you know, despite COVID, we've had a huge property boom, and that property boom seems to be, I mean, don't take it from me, seems to be like having its second wind right now. But it's hard to go by. Every time we have a huge migrant boom, we have a huge property boom almost every time. And what we're seeing over the next 1, 2, 3, 4 years, perhaps if Labour gets another term, we will see probably 2 to 3 million new migrants in Australia over the next 5 to 10 years. What will that mean for house prices? Well, if history is anything to go by, and trust me, like in the history, there has been interest rates all the way up to 18, 19%. So interest rates aren't really like the biggest factor in property booms or busts. Are we going to have another property boom because of this migration boom? I don't know, like it's hard to say no to that, but I just don't want to say like an explicit yes. But the point of this video was Sydney. Sydney gets the predominant majority of migrants because it's the world city. Everyone knows about it. Now, keep in mind that property prices in a particular city don't always grow based on the absolute number of people that move there. They grow based on the relative number of people that move there. So a place like Perth, even though it's not getting as much migrants as Sydney, on a percentage basis, based on the total dwellings available in Perth, it's actually getting a far more disproportionately higher number of migrants on a percentage basis than Sydney. So this migration boom's having more, impact on Perth property prices upwards than it is on Sydney. But nonetheless, on an absolute basis, Sydney's getting the highest amount of migrants, and it's kind of hard to say that property prices will go down in Sydney anytime soon just based on that. But that's the first thing I wanted to take you through. What do you think? Leave your comments as well below. I'd love to hear your thoughts. Well, obviously property prices in Sydney are the highest in the world on basically any affordability metric. They're higher than New York, they're higher than Moscow, they're higher than London, they're higher than Turkey, they're higher than any other place in the world on an affordability metric. So that tells me that, is this sustainable? Tell me if you think it's sustainable. But a part of me, one part of my brain is there's only one thing that can happen. There is no precedent for this. There can only be a huge crash, right? Because the average person, they simply can't afford it. They couldn't afford it 5 years ago. Let's be honest, maybe even 8 years ago, people couldn't afford it. 10 years ago in the paper, for those of us who have been around in the real estate market for more than 10 years, we know even 10 years ago, all the newspaper headings were Sydney unaffordable, complaining, this and that, right? Now it's just even more so. So it's hard to argue against a crash. But check this out. This is showing the wealth that is generated in the world as of right now and in the future. Let's just start at 2015. So in Australia, number of people with a net wealth of 5 million plus was 134,000. Fast forward to 2020, so just before COVID, I would say, 176,000. And then the projected amount by 2025, which is only 1 or 2 years away, let's just take it for now, is 215,000. So that's a huge amount of growth, right? And the world is no different. That is growing as well. The amount of wealth, net wealth, 30 million plus, is also growing from around 2,000 people to more than 3,000, projected to be almost 4,000 in the world. It's growing as well. And then you've got the billionaires. Let's not go there. But my point is that I don't think, let me know if I'm wrong, but I don't think the Sydney property market is really dictated these days by the average person. It's no longer a bell curve. It's no longer the average person making, $90,000 a year that dictates what happens to property prices. So if interest rates go up, if foreclosures happen, if cost of living goes up, the Sydney property market's whatever. We've got enough demand from other people who can afford it for good or bad, for better or worse. I'm not here to make a judgment on that. So, one school of thought is is there really an affordability crisis? Because clearly enough people can afford Sydney property, hence the houses are being sold quick time and prices are going up rapidly, even with these huge interest rates, right? That's one school of thought. Actually, there's no affordability crisis, because in economics, demand means an ability and willingness to buy property or to buy good or service, and there's plenty of willingness and ability. So where's the affordability crisis? Now, of course, it's the evaporating middle class that is suffering, because they're the ones who can't afford it. But once again, coming back to the immigration story, that would tend to suggest there's a big boom coming for a place like Sydney. Now, the affordability story suggests that there's probably a big bust coming for Sydney. That wealth distribution or inequality, getting further and further disparate between the haves and have-nots, that suggests that despite affordability, there's a big boom or at least continued price pressure going to occur. What do you think? And then you have charts like that kind of further push the nail into the coffin, where you see building activity, which is obviously a leading indicator of future supply. The more supply there is, the less prices grow, because there's enough, houses to go around for everyone. You can see in New South Wales, obviously where Sydney is, construction or building activity is down. For detached houses, blue. For multi-residential, like apartments, that's down as well. And for non-residential, that's down, like commercial property. Of course, it's not as down in New South Wales as it is compared to Victoria and WA, which is the most bullish in terms of property prices, because supply is at record level down. It's just there's no supply, nothing getting built. Queensland's not too dissimilar either. So, that suggests that even right now, property prices are going up in year time, in 2 years time, in 3 years time. They'll continue going up because there's no supply on the horizon. So those are a few like different multi-dimensional ways to understand what's going on in the Sydney property market. But let's obviously break it down suburb by suburb, because we can't buy Sydney. You can only buy one property in one street in one suburb in Sydney. And at the end, after like another couple of minutes, I will share with you why personally I will never touch Sydney residential property if I'm a property investor. But let's go through this mapping the market tool real quick from CoreLogic. Now this is free. You can Google it. You can find it yourself. And let's go through 5 metrics: current median value across Sydney, 3-month value change, 12-month value change, current median rent, and 12-month median rent change. So the current value or current median value for Sydney properties, you can see here is Sydney. The darker the shade of purple, the more expensive it is. So if you're new to Sydney or new to Australia, you can kind of check it out here, right? Obviously these lower North Shore areas are very, very expensive around here. And then you've got the eastern Sydney areas like Bondi, Coogee, Randwick, very, very expensive. And as you tend to go west of Sydney, it becomes less and less expensive. Of course, still very expensive, right? If I bring the legend up, even this sort of light purple is $1 million or thereabouts. But where is the value? And you got to be careful around Badgerys Creek. They've just released the new flight paths for the new Sydney airport coming online in 2026, just a couple of years away almost now. And that's suggesting that around Mount Druitt and this sort of, Erskine Park and Colleton, etc., there's a lot of flight paths. So I wouldn't want to be rushing out to buy property around this area, because those flight paths mean that the decibel reading for aircrafts taking off and landing might interrupt your day, and that's obviously a detrimental factor on house prices. But I think there's the most value in Sydney for a property investor, even though I would never buy there. I'll tell you why. Around this Liverpool area, you've got inexpensive property, relatively speaking. Still, you can get something on 600 square meters with a number less than 7 figures, like less than $1 million. And you can see there's pockets more expensive even further out from the city around this area, okay, around Leppington, etc. So you've got this kind of pocket in the middle here, which is showing value. It's less expensive than further out places where that doesn't make any sense. Of course, there's local dynamics, and I'm just making generalizations here, but I think there's some value over there. And of course, our favorite spot for a lot of the Asian community and like the Indian community and things like that is around Rouse Hill, around Stanhope, around Quakers Hill, Schofields, etc., Box Hill, etc. These areas have become quite expensive. And like my thought on this, right, is yes, right now they're in-demand areas, mostly due to migration. And let's be honest, a lot of new migrants will flow through to this northwestern part of Sydney as well. But fast forward 10 years, fast forward 20 years, when all these new house and land packages and townhouses that have just been built over the last 5 years, they start to look like a bit like Ghettoville, because let's be honest, the quality of the build these days, or even in the last 5 years, cannot be compared to how they built houses in the 60s, how they built houses even in the 70s. And so these houses, I don't think will last this test of time. Fast forward 20 years, I don't think these will actually be fantastic areas to live in at all, despite the current kind of attraction that they have from particular communities. A lot of houses, as soon as they're old, they'll lose their charm, and I think a lot of that, the X factor will go away. And so you see areas like Blacktown. Now, I fully understand the stigma of Blacktown and areas like that, but you see how they're much less expensive than these areas up here, despite being a little bit closer to the CBD, or even Parramatta, which is a satellite CBD. I think these areas like Blacktown, this has more value, this has more upside potential over the next 10, 20 years than these sort of, I would say, new migrant-laden areas like Schofields, Box Hill, Kellyville, etc. But I mean, nothing wrong with those areas, but I'm just talking like 10 to 20 year horizon, just my own unbiased opinion, right, based on how I've interpreted data and been correct most of the time, and how I interpret data as of now. So that's a bit of the lay of land. Let's check out the 3-month delta. So you can see everywhere in Sydney is going up. It's very interesting that that these sort of inner south areas have been going up the most, like around Belmore and Canterbury, Earlwood, etc. Of course, the premium end of the eastern suburbs has gone up as well. When property booms start, it's always the expensive properties that go up the most, and it's also the expensive properties that go down the most. The cheaper properties, i.e. all around here, northwest, West Sydney, south West Sydney, they take longer to go up, but then also they don't fall as much. So you've got affordability plus less risk in this kind of left-hand side, which is always something we prefer. But by and large, everything has been doing well, except for Austral, which has been another hunting ground for a lot of these scammy marketing companies that sell townhouses, house and land packages. A lot of new migrants have fallen for that. And, despite Sydney property prices leading the charge, Austral has really lagged even in the last 3 months. Not to be confused with Australand, which is in WA, and it's actually a fantastic suburb to invest in right now. I'll do another video on that, but free tip just as I thought about it. Let's look at the 12-month value change. So everything went down. And do you remember, you can check it out on my YouTube, about 2 years ago, 2.5 years ago, everyone, was bigging up Sydney, and I started to say, guys, Sydney is topping out, don't invest there. And I got a lot of flack, but check it out. There's a good reason for that, because you don't see this kind of red in most parts of Brisbane. You don't see this kind of red where we were investing in places like Adelaide and in Perth and in regional areas around Australia. So, data doesn't lie. And this was entirely foreseeable. Of course, hindsight's a wonderful thing, and everyone will say, yep, we all saw this coming, right, with interest rate rises. But in 2020, late in 2021, before interest rates were a big talking point, no one saw this coming. No one was talking about a Sydney crash, probably except for me. And the areas that have fallen the most are these more expensive areas, right, around Hurstville and these eastern suburbs, the lower North Shore, these inner western suburbs, as you can see here, northern areas around Artman and etc. etc. Let's see how Western Sydney has performed, or Northwest Sydney up here, Rouse Hill, Beaumont Hills. I mean, fantastic suburb, Beaumont Hills, but that's fallen as well. This area around Winston Hills, I mean, very expensive, but that's fallen one of the most as well, all the way out to Blacksland and Glenbrook. That's been one of the worst performers. So by and large, a lot of it has performed very badly over the last 12 months. Yet, if you were an intelligent property investor, you would have made double-digit gains in South Australia, in regional Australia like Queensland, and in WA in Perth. Now let's check out current median rent value. No surprises, the most expensive areas also have the highest rent. It's obviously not disproportionate. The more expensive property you buy, the yields fall, so that's why we want to buy properties under 700k. Let's look at the 12-month change in rent, and it's predominantly been around here. The rental crisis is not so exacerbated in Sydney and Melbourne as it is in other parts of Australia. And as soon as this kind of rental pressure starts to alleviate, which it will do, it can't stay here like this forever, then I think rents might even come down in Sydney. The conclusion of this video, like I promised at the start, why will I never buy in Sydney as a property investor? Number one, I think it's very high risk. Yes, I think it can go up, and I think in 20 years, probably prices will be much more higher than what they are right now in Sydney. But I think it's much higher risk because of the severe unaffordability. The second reason I will never buy in Sydney residential property is because a huge negative gearing. Every property that I will buy, even if it's just $1 million, like in around Liverpool, is going to cost me $10,000 to $20,000 every year just to hold. Extremely poor cash flow. And even if you only care about capital growth, guys, and even if your incomes are really high and you're like, I can afford that, it's going to take a toll on your borrowing capacity. It's going to limit how many further properties you buy, because the bank's going to be like, well, this one's costing you an arm and a leg. We're only going to lend you another 1 or 2 properties or nothing at all. Therefore, that's the cap of your property investing. Whereas if you buy high cash flow properties interstate, you can get the same better growth. And because they're giving higher yield, the bank's going to be like, yep, you can get another one. Yep, you can get another one. Yep, you can get another one. And so in 5-10 years time, your total portfolio value will be much more than what it could have been if you had just bought in Sydney. So you need to understand it's not all about suburb selection. It's not all about capital growth. It's about the oil that goes into the car. It's about the cash flow that then in turn allows you to build your portfolio higher and higher, more and more, to get more capital growth off a wider or a larger asset base. It's all about the asset base at the end of the day, because annuity or cash flow comes in direct proportion to your asset base. So that's the second reason why I'd never buy in Sydney. It just is a suicide for a property investor. It's like shooting yourself in the foot from a cash flow perspective. So overall, look, I could be terribly wrong, and I think, maybe Sydney's in for another boom, but nonetheless, I think smart property investors will always find other areas and other parts of Australia that will outperform Sydney and outperform it from a cash flow perspective as well. Growth plus cash flow is the name of the game. Even places like Launceston, humble old Launceston in Tasmania has outperformed Sydney over the last 30 years whilst being almost double the cash flow. There's hundreds of other locations like that. Go for them as opposed to Sydney is what I'd say. But hopefully this was a half decent update of the Sydney property market. Let me know what you think. Hit the subscribe button, hit the thumbs up icon. Guys, I'll see you next time. My name's PK. See ya.